Hey, what's up everyone? Welcome into the channel. My name is Brett with Investor9 Today we're continuing our series of No 8 to 5, completely living out of a brokerage series. This is going to be the end of April update. We've done a ton of changes within April. So in this video, we're going to go ahead and cover all the earnings that just went through here on Wednesday, Thursday. Those are the big ones, right? With Microsoft, Meta, Apple, Amazon, Google. So we're going to go ahead and do a quick recap of the market update. Take a look at our retirement income update. We ran ahead and deployed thousands of dollars into our retirement account. So we're going to go ahead and showcase what exactly we purchased, why we purchased it, and how this is going to generate a self-sustaining retirement account going forward to redeploy capital within. And then we are going to be covering the many buys. We did a ton of changes this week. Was definitely one of the most selling and buying. We have a whole list of companies that we went ahead and, sectors or companies that we went ahead and purchased. So we're going to go ahead and go through all of that. And then number 4, we'll go ahead and cover the updated individual dividend portfolio. We did increase our annual salary by over $100 this week alone. So as we roll into May, we're going to continue to dollar cost average into the market, increasing our yearly income going forward and our monthly income as well with it. And we did have a bunch of wins here in the month of April. We'll go ahead and showcase a few of those and my plans going into May and beyond. So if you guys are brand new here to the channel, I would really appreciate if you go down below, smash that subscribe, smash that thumbs up. It really does help out the algorithm. Also, drop me a comment down below. It doesn't matter what it is. You can say hello. Let me know what you're buying, what you're selling, what you think of the market. Let me know down in the comment section below, and check out the pinned comment to join the Discord server. So with that said, let's jump into the market update. Jumping over into TradingView, starting with the SPY ran up to new all-time highs today. We can see here at 7:20 a.m. S&P 500 rolled up to a high of $724.87 before pulling back a smidge, but still, that is amazing. Crazy, right? We also saw the Nasdaq once again hitting these all-time highs, hitting it twice today at once again 710, hit a high of 675.76 with just not a few days ago, right? Not a few weeks ago, we were below 600 on the Nasdaq. So it has had amazing growth and has had continued growth here recently and everything else along with it. Now, jumping into some companies that had earnings this week, we had Meta starting off early this week. Meta came out, actually did really well with their earnings. You can see they had a huge surprise on their EPS of over by 56%, but still fell off a cliff. I think it was down 7% from close to open. Yeah, 7.2 some percent from close of Wednesday after hours, their earnings, and then opening down over 7% there on Thursday. Microsoft also had some earnings. Once again, they did really well with earnings and revenue. They came in with a surprise of 5.18 on their earnings, and revenue came up by 1.77. So really not bad at all, but they continue to sell off here. So from close on Friday to open on Thursday, they were down about 2.36% before selling off all the way down. I think at lows it was around 6%. So you can see down here they went down around 6.176% from that Wednesday close until Thursday during the day, and into Friday they did pull up a bit. Went ahead and liquidated on Microsoft at 414.14, and I'm looking to roll that into Meta, but we will talk more about that here in a minute. Next was Apple. Apple did excellent. They didn't beat by a lot here. You can see their EPS came in by 3.3% over. Revenue came in at 1.58, but the reason Meta and Microsoft fell versus the other ones did not sell is their CapEx expenditures came in and declared that yes, they're going to be increasing their CapEx. So if we look at like Microsoft here, they were going to be guiding higher for their CapEx spending of 190 billion for 2026. So they guided higher than expected, and that's what kind of drove that drop off. But Google beat on earnings. I think they had actually pretty good. Yeah, their surprise on EPS came in at 90.44% over. So they were estimated at $2.68 or $2.68. They came in and reported at $5.11. That was huge win and bonus. So yes, they closed there on Wednesday, open on Thursday, up 7%, and just continue to move higher to these all-time highs. Amazon, they did really well as well here. You can see here, they beat on EPS by over, by 70%. They were expecting 163. They came in at 278. That's a beat and surprise by 70%. Their revenue came in 2.39% over. and they moved to new all-time highs before pulling back a bit, right? This market has been trending higher and higher, and we're looking for that breath. I am honestly really surprised that we haven't had a breath where the market pulls back anywhere from 1 to 2%. I feel would be pretty comfortable, but no, the market is continuing to run higher and higher. And who knows where it will either stop, pull back, or just continue chugging higher. Let me know down in the comment section below. What do you guys think? What do you think is going to take place here in the market? So that's the quick market update. Diving into our retirement income update plan. Going forward, we did do a ton of buys. So I'm not going to go through this huge list here. We did do one single taxable event on Thursday. So Thursday, April 30th, the final day of April, we did do one buy on the gold high income ETF. I went ahead and purchased 9 additional shares. We'll cover that more here in just a minute on how it affected our taxable account moving forward. But we did do a ton of buys. Now, I could go through each of these individually, but I think it would just be kind of a blur. So instead, we're going to go ahead and take a look at my stock journal. Stock journal, I like to write down everything that I buy, when I bought it, what price I bought it. If I sell, I will go ahead and mark it as a sell. So earlier this week, you can see normally my weeks are pretty small. So here's all the changes within a single week here, and I alternate it by color. So here, this is all week 18 alone of 2026. So we started off this week with kind of testing the waters with the sector-specific covered call funds. So XLVI is the healthcare sector, but it's an income-specific ETF that just focuses on the healthcare sector. If you look at the S&P 500, there's technology, communications, consumer discretionary, healthcare, financials, right? I'm targeting specific sectors with these funds. So we did buy into XLVI, that was healthcare. We did do a buy earlier. I already kind of covered that earlier in the week. And then I just recently did a buy on the gold ETF. So these are the only two ones that I did this week within my taxable account that are going to be affecting my income going forward. We'll cover that here in just a minute. But my main focus here this week was I had capital that I received from rolling over my accounts from Fidelity to Robinhood. We received a little over $3,300 of capital as a bonus, and I wanted to get it deployed in a way that would generate cash within the account that could self-sustain and pay, dollar cost average or buy dips, etc. Because I have no active income, I have no 8 to 5. I have passive income through dividends, I have passive income through real estate, I have from the military as well, VA, and that's all considered passive income that I cannot invest and contribute into the market in any way because it's recognized as passive income. So I have to have earned income. So for that, my channel as of May 1st is now fully monetized with over 4,000 watch hours. So if you guys are watching this channel and getting an ad, I'm now monetized here on YouTube. So anytime you watch an ad, it's going to be benefiting me, benefiting the channel. And I could use that cash to invest into a Roth IRA, and with Robinhood Gold, get a 3% match of up to $225 a year. But if I don't make a whole ton on the platform itself on YouTube, then I still want to have a self-sustaining retirement account. So here's the plan. So XLV is the healthcare sector. I bought a little bit too much of it, so I did end up selling 20 shares, my original 20 shares. I did sell it. I made a $7 profit on my initial shares that I purchased. The reason I didn't want to buy more healthcare is, yes, I'm buying healthcare because I feel it was underappreciated. And as sector rotations happen with energy and technology, I do believe that they'll either roll into healthcare and finance. And I wanted to be invested into healthcare, but I didn't want to be a big specific area there, right? So I sold a little bit of that position, and I wanted to roll that specifically into K, which is technology. So next one here that I purchased was XLEIE for energy. With the war going on overseas and continuation of other areas in the future, I do feel that oil is going to be pressured higher. And while we do have, maybe a deal we're playing here in the short term, it's still not going to fix things within the next week, within the next month, within the next quarter. And I do believe oil energy is going to continue to move higher and higher. And I want to take advantage of that. So we are invested into XLEI. Next is XLKI. This is technology. This is one of the biggest growers in terms of capital or appreciation. So I wanted this to be a bigger portion. So within my IRA, we can see here we picked up 45 shares within the IRA, and within the Roth IRA, we picked up 37. And you can see I have these split up through here. You can kind of see which ones go into the IRA or Roth IRA. We will take a look at the Robinhood account really quickly in just a moment, but I wanted to go ahead and cover this just on how I purchase these, right, and why. Next was XLUI utilities. As we move forward, utilities and infrastructure are going to be a big player. With the AI expansion, data centers, they're going to need a bigger consumption of energy. Utilities is going to benefit from that. Infrastructure is going to be benefiting from that. So we'll look at these ones individually here. So technology, XLKI, this is total return in the orange, up 19.96%. This is just price appreciation alone. So yes, there's a big difference here between total return and its actual price appreciation. That's because this pays out a dividend, and then I'm going to decide what to do with that dividend, whether to roll it into something that is underappreciated, depreciated here in the short term, and then just kind of average down, or I could use that to buy into my growth companies such as Microsoft, Meta, or something, right? Here we have energy, total return up 27.11% since its origination back in October. Price appreciation has been 7.7. Industrials total return here is at a 12.7% with the price appreciation at 1.52. Utilities here is at 10.28 total return. It is price negative 1.02. And then the last sector here was healthcare here. Healthcare was the last one that I went ahead and invested. Total return is at 10.27. It has been beat down here in the short term. I'm trying to buy here during this dip. I do think healthcare is going to be a sector that will be rotated into in the future, and I just want to take advantage of that. So total return here at 10.27. Price appreciation is at negative 0.59%. So if we take a look at these ones, and I've added those into the portfolio. So they've all been added in here. Now, other things that I did today here was I sold out of my Microsoft position. Now, this was in a retirement account. So unfortunately, because I don't have a margin account with, I don't use margin within my retirement accounts, the cash doesn't settle right away. And I learned that as I was trying to sell out of Microsoft here, I went ahead and sold it at 414.16. We take a look at now Robinhood. We take a look here at Microsoft. It's now trading at 414.29. So it's going to be in this little range here. It could actually dip down to 413 below my sell price, but I'm not really focused on Microsoft here at the moment. What I want to do with this capital is on Monday, I will more than likely roll this into Meta, right? I sold Meta way back here at $711 during this time frame. No, it was even further back than that. So I rolled my capital into Microsoft from Meta and actually kind of maintain a lot of the appreciation. Yes, I did lose a little bit selling out of it today, but if we take a look back at the history here, when I originally sold Meta right here, I did some capital gains on Meta of 58.63, 57.65, and rolled it into Microsoft. I'm losing a smidge of capital gains on Microsoft, but instead, I sold Meta at 7.11, and it's back here at 6.12. So I'm just going to roll the capital that I had from Microsoft and roll it into Meta, and I'll capture that appreciation with Meta long term, because I do believe there's a lot more growth potential for Meta versus Microsoft long term, and I do want to take advantage of that going forward. And yeah, that's basically it in terms of a lot of our buys and sells. If we now jump into our number 4, before we pop over to the Robinhood account, we will take a look at the dividend portfolio and the income update. So popping over to our dividend portfolio, you can see that our final buy this week, we did buy yesterday on the 30th, IAUI. That is the NEOS Gold High Income ETF. We increased our shares from 262 to 271. The position is down a bit. I'm actually considering bumping this one up to 300 shares as well. So you can see our monthly income increase from this one from $91.70 to $94.85. That's a monthly increase of $3.15. We increased our yearly income now by over $51,509. This one's a little bit off. I'm not sure why these ones are a bit off, but you can see here our yearly increase based off this buy yesterday is $37.80. Now, for the week, with the capital that we've invested into our individual account, we increase our annual or yearly salary going forward by $117.60. So on a weekly basis, we increase our income by $100 for the year. If we continue to dollar cost average into May and beyond, by the end of this year, we might have a pretty good, by the end of the year. I'm not sure where we'll actually end up at, maybe over $52,000 of annual income. That's why we're journaling this. We're kind of seeing how this plays out, whether this is a good self-sustaining system or does it need some tweaks. As of right now, it's doing really well. You can see here that we increased our shares from 262 to 271. We did decrease our average cost basis from 57.16 to 57.12 based on those little shares that we purchased. If we go ahead and continue to buy more while the market is dipped a bit more, we could probably dollar cost this down a little bit more, but it's quite all right. So that is the update in the dividend portfolio. Now, jumping and taking a look at Robinhood. Before we cover our plans and wins, we will jump into the Robinhood portfolio and take a look at the live stuff right now. So as I said, our portfolio breakdown is as it looks on paper. On the spreadsheet, our T-SPY position is 4,100 shares. TDAC, we're still working on bringing this position up to match my T-SPY position of 4,100 shares, but the price continues to move higher and higher. I'm waiting for that breath, but it may not come in the way that I want, or it'll happen a lot faster and a lot sooner than I want, right? IWMI, and it's also continuing to move higher. IAUI, that's that one that we purchased yesterday. It's moving up a bit off its recent lows. BTCI continue to move higher, and good to see Bitcoin continuing to move higher. The capital within our portfolio, we're sitting at 14,349. Now we are paying down our Fidelity credit card this month and hopefully be done with that. I shouldn't have any more charges on that credit card going forward. And I did pay down a hefty Robinhood, a hefty Robinhood credit card. On our notifications, I went ahead and paid down our credit card, and you can see here I successfully redeemed $103 of cash back. So we did have a pretty hefty credit card bill on the Robinhood side. That's just because we bought some brand new tires for my wife's car. We fixed my brakes on my car. We also did some birthday purchases for my son's birthday coming up. We're celebrating on Saturday, and then his actual birthday is on the 4th. So we're doing a few things for him as far as, a birthday event, cake, birthday presents, such. So there's just little things that just kind of happen, but we did have a lot of inflow of capital this month. That was really nice with transferring over to Robinhood. We did get that nice bonus. We did get our tax refund as well. We got some cash back from our 3% cashback card with Robinhood. This month was a little bit higher in terms of expenditures on our credit card, but we're hoping to, we not only hope to bring it down, but we are looking to bring it down as we roll into May and beyond to bring it back under control. Yes, we had a surplus of capital. We wanted to make sure that we took care of majority of the things that we needed to in our daily life before we get back to investing our full capital into the market and having it appreciate and grow our monthly income and our annual income overall, right? I don't plan to have extra capital sit in the account long term, but we do have some things I wanted to pay down, and I did want to just kind of have it available just in case, right? And the market has been just appreciating with nothing really stopping it, with no end in sight at the moment. Okay, so that is the individual account. Yes, we did hit some new all-time highs here. The highest the portfolio has ever been, 355,565 within this account. If we pop over to our retirement accounts, these ones are ones that I have no interest in taking and using capital from these at all at the moment. So all of these are being self-sustaining, and I will use them later when I retire at 59.5 full time, where I could then, begin distributions from my Roth IRA, from my IRA, okay? I did also have some additional capital from Fidelity rollover once again. So you can see here, I got another bonus of $3.06 in this account. So you can see here, we have $169 of buying power. Well, I have some unsettled funds. That's my Microsoft sell. You can see here, I no longer hold Microsoft within this account. I did sell my Microsoft. I want to roll this capital right into Meta at the current price that it's at $611 right now. It's 613. By Monday, when the capital settles, it shouldn't depreciate back to anywhere, prior to where it was before earnings. So I should still be able to land a pretty good opportunity in Meta. You can see here our positions here. These are going to be our income producing ones: XLKI, XLEI, XLII, and XLUI. So if we pop over here, go into our income tab, and we're going to go and look at the Roth IRA portfolio. So I am using and have used a specific website here called the dividendtracker.com. Now I use other ones like trackyourdividends.com or stuff, but they didn't actually show these ones specific. So I went ahead and entered these specific holdings that I bought within the Roth IRA. 25 of the industrial, 16 of the utilities, 25 of the energy, and 37 of the technology. And you can see here, they do pay out every single month. The dividend itself is irregular, like it changes from month to month. But you can see here, they did go ex-dividend. If I go ahead and refresh this, we'll see they should have gone ex-dividend here on the 1st of May. So it's not going to be updating there at the moment, but that's fine. On a monthly basis, these should generate anywhere from $30 to $40 of dividends that I could just use either to reinvest into a sector that I feel was beat down here in the short term. So say technology pulls back a bit, but I'm still very comfortable with technology in the long term. I can take the capital from that, roll it into technology sector specific ETF, or I can roll it into another holding that I have, dive it into the traditional account. Again, same kind of plan here within the traditional account. I went ahead and liquidated out of Microsoft within this account. We did have additional capital roll in from Fidelity over to here as well. We got $4.74 for our bonus here. And we did sell out of Microsoft, as I said. Now within this account, I am holding one extra position. That's the healthcare. So we are holding the healthcare sector, energy, technology, utility, and industrial. And that is having a little bit of a different thing here. You can see here, this one's at 4101 with about $2,700 invested into this one. If we rolled into the IRA engine, this one had a little bit more capital and cash than in this one. So that's why this one has the healthcare sector. So 20 in healthcare, 20 in industrial, 20 in utility, 50 in energy, and XLKI. This is showing 25. XLKI is at 45. So I am now at 45 shares of XLKI, which is the technology sector. So this XLV was healthcare. This was at 40. I reduced it down to 20. The funds needed a day to settle. So that, today is Friday, the 1st of May. So the funds actually settled. And this morning is when I went ahead and purchased, we roll down through here, we purchased the technology specific ETF, and then we sold out of our Microsoft positions right through here. So yeah, that's kind of the current plan going forward. These are going to be kind of self-sustaining. The IRA will generate anywhere from $50 to $60 a month, where I can kind of reinvest that as I see fit into the sector specific ETFs or into my growth specific individual stocks. But I'm invested into at least 4 very strong sectors: technology, energy, utility, and infrastructure. And I'm invested into a few that I believe was beat down, which is the healthcare sector. That's why I recently went into Avi, went into United Healthcare in the other account, because I feel like these specific sectors were a bit beat down, and I don't mind kind of holding here for the short, for the longer term in these positions, because I do feel that they will move higher going forward. So I think that is going to be it in terms of taking a look at the portfolio. The last thing here in the final area is the big wins and update moving forward. So in the month of April, we did have some big wins. We updated our insurance, cutting down our yearly spend on insurance from 2501 to 1883 by swapping from USAA to Allstate with my investment properties. We did have a big bonus there. You can see we already kind of discussed transferring the IRAs and the Roth IRAs over from Fidelity to Robinhood, but we did have some really big bonuses. We also got our refund that I transferred into my Robinhood individual account, which was being used, that will be used here in May to begin dollar cost averaging more into the market. I would like a pullback in the market, but hey, I'm pretty happy with taking a look at my portfolio and seeing it growing day after day. It is nice to see it getting larger and larger, but at the same time, that just means that your things that you want to buy dollar cost average into get more expensive and more expensive, which means less buying power, less shares that you're able to buy and purchase, and all of that. And kind of going into my plan for May going forward, I have a plan of refinancing one of my units. This is a duplex. It's worth anywhere from 182 to 200,000. If I could pull the cash out, I would increase my interest rate or the mortgage rate from 4.75 to 6.8 on an investment property, but it would be able to pull out roughly anywhere from $60,000 to $67,000 of fresh capital after fees and all of that allocation. Now, my idea here is I can't write off the interest or the expenses associated with this refinance unless I have a business purpose. And when looking into this, I can actually take the capital that I would get from refinancing, make an individual account all by itself for tax purposes, for IRS auditing, and I could roll it into an individual account and then deposit and invest that specific capital into funds such as T-SPY, TDAC that would generate income. Now, I couldn't actually use the cash that I refinanced out of my property for personal reasons if I wanted to get that interest deducted, but I could take that $67,000 and invest it into the market, and any dividends that it produced here would, my monthly mortgage would increase from 553 to 1,007, but my new dividend income would increase to $850 by that investment. My net spread would be $400 between the difference of my increased mortgage and the capital that the ETFs would produce. So I would basically just take the capital, invest it into the market, get appreciation, get dividends along the way. Right now, my properties have not done anything within the last 2 to 3 years. They've just basically stagnated. I have equity that's been sitting there. I have considered selling a few of the units, but that would take a few things. If I were to liquidate if I were to liquidate real estate, I would have to pay down the loan. I would have to pay taxes. I would have to have depreciation recapture and fees and a bunch of other stuff. So there are other ways that I'm looking at trying to get access to the equity and smart ways of reinvesting and generating even more income going forward. So that's kind of the plan going forward. I did post this in the Discord. So if you guys are interested in checking out some of the goals and chatting, definitely join the Discord and say hello. So that is going to be it for today's video. We covered the market update, retirement, the buys and sells that we had this week. We had so many, and our updated dividend portfolio, along with our wins going forward for the end of the year. So with that said, guys, I do appreciate everyone tuning in and hanging out. If you guys have any comments or questions, definitely drop them in the comment section down below. Go down below, subscribe, hit that thumbs up, would really appreciate it. Drop me a comment. Let me know if you guys are buying anything new, selling anything, dollar cost averaging as normal. And that is it for me. Thank you all. See you guys later. Bye-bye.